Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we are tracking at this hour. Markets are in consolidation mode. The Nifty trades around the 11,700 mark. Metals and PSU banks are lending support. The government asks RBI to prepare a list of public sector banks that can be merged. That's a Bloomberg exclusive. The currency continues to remain the worst performer in Asia, plunging to record lows today. And JSW Steel gains the most in over 7 months after it will be included on the Nifty in September 28th. And, well, more than 99% of the demonetized notes have been returned to the RBI according to its latest annual report.
Well, that remains the top draw. Agam, thanks a lot for that. Viewers, thanks for tuning into Countdown. My name is Nitasha. And the markets are, well, flattish. We might be trading in or around the lowest point of the day, but we have a flattish day of trade on our hands. The Nifty Bank 2 has traded extremely flat, so marginally in the green, if you will, but it's a very flat day of trade for the Nifty Bank as well. Just pull up the market breadth. The advanced decline ratio should come up on your screen for a moment just to show what's happening there. And while largely in favor of the advances for most part of the trading day, a bit of a convergence in the last 45 minutes to 1 hour of trade, or maybe 1.5 hours of trade. But let's pull up the heat map and try and show you what's happening on the Nifty. JSW Steel on one hand is doing extremely well, and that remains the top draw. UPL, JSW is not a part of the Nifty, remember that, but that's happening at the expense of Lupin, and that stock is down about 1% in the session today. What's fallen the most though is Coal India, and Reliance is soft today. For days now, we've been talking about how Reliance Industries features in the list of the top gainers or the top contributors. In today's session, it is down about 1.5%. Must be the top contributor on the losing side in the session. That aside, not too many losers or not too many trends, but for the fact that UPL is up about 3%, there is some strength in Bajaj Finance yet again, and 1.2% higher. So that one is doing very well for itself, continues to nudge new highs. ONGC is amongst the stocks which is in the reckoning today, so good going. And OMCs by and large have had a fairly decent day. I can at least see IOC and HPCL doing rather well for themselves in the session today. So that's the brief setup of what's happening across the bourses. The mid caps and the small caps have been slightly quiet as well, but there have been lots of interesting movers in trade.
Well, definitely, Neeraj, and considering that you already mentioned JSW Steel, this is one of the most powerful sessions for JSW Steel. You've seen the stock on an intraday basis going up 10%. Other than that, TTK Prestige, you've got CLSA, which has raised the target price in TTK Prestige to 7,725, saying that the story is improving consumption and overall government spending will help boost the profitability for the counter. Nalco is the other one. You've got HSBC initiating a buy call on this one with a target price of 90. The stock's currently trading at 77. It's up about 3.5%. Today's trade envisages a lot that's happening in the PSU, the mid-cap banking lot. So a stock like Bank of India does 4% in today's trade. You've got a Union Bank, Punjab and Sindh Bank, which is up about 9.5%. So a lot of interest that's building up out there. I want to also highlight some volume buzzes in trade today. You've seen a lot of action and activity in a future consumer. So that stock's up about 7.5%, and 1.3 crore shares have been traded here. And HDR, which is also up about 9% in trade, which is at 31 rupees, that has seen trades of about a volume of about 3.4 crore shares. And you've got a Hathway Cables, which is seeing a gain of 9.5%, and that one on an average basis has done about 25 lakh shares, which is higher than what we're seeing in terms of the daily average move.
Okay, well, then let's talk about the futures and options space. And, well, the rollovers have certainly picked up. As of yesterday, when you consider the Nifty rollover standing at around 36%, that was slightly higher than the previous 3-month average of around 30-odd%. Have these rollovers picked up in today's day of trade? Let's take a look. Well, there you have it. That's your increase in open interest in today's day of trade. And, of course, rollovers now standing at around, well, okay, 43% for the Nifty. So it's certainly a higher figure now. And this number naturally will be a lot higher as we move into expiry tomorrow. Let's pull up the Nifty banking rollovers too, and as you can see, standing at around 37%, an increase from yesterday, but not as high as the Nifty. The India Volatility Index has also moved substantially in today's day of trade, and we have seen some moves. So let's pull up the India Volatility Index as well and take a look at what it's doing. It's advanced by around 1%. It's still below the mark of 13, as a lot of the analysts have been talking about. That said, let's start and address where we've seen the changes in open interest, and there is substantial change in open interest around the 11,700 mark, because that is the crucial a level that we're watching out for, considering we had seen so much increase in open interest in yesterday's day of trade. And of course, the other one was the 11,600 mark, where we have some support coming in. In terms of the most active stock futures, we've already starting to see rollovers in the likes of Bharat Forge, where rollovers are currently at well over 56%. Or 62% now. So there has been a spike in the last half an hour odd. Syndicate Bank is also seeing high rollovers of 60%. It's the same for BPCL, over the mark of 59% at this point in time. In terms of most active stock futures, we also have UPL. That is up and about. It's advancing. It's seen fresh longs. Britannia on the losing end, seeing weakness and fresh shorts building in there. We have Berger Paints, which is also seeing some amount of weakness in today's day of trade. Was some shorts building in there as well. And Capital First is the curious one, because that is starting to see some amount of traction, and that's starting to see fresh longs in August futures. These are some of the stocks that I'm tracking right now.
Well, interesting. The fact that the OMCs have not reacted too poorly to the rupee fall speaks volumes, because usually they tend to react negatively. But speaking of the currency, I think that's the big talking point. It's hit a new low in trade today. And analysts that we spoke to are saying that there could be some more downside. But aside of what will happen in the near term, it's also important to take stock of what could happen for the medium term. And let's get in a special guest on that, Anand of RBL Bank, with us in our studios to talk about that and more. Anand, good having you. Thanks so much for joining.
It's my privilege to be here.
So I remember a conversation that we had, a couple of months ago, around the policy time, when the expectation was that, yes, there could be further weakening. Did you anticipate this pace? And part two would be, where do we go from here on in the near term?
So possibly, if you would look at the dollar index has been appreciating, so which means all the emerging market currencies are actually losing in value. So most of the emerging market currencies have lost anything between 3 to 7% YTD, if you would look at it. However, the movement in rupee has been more accentuated. This is broadly, we generally see in a pre-election year that rupee movement is generally a little more volatile. So that is one of the things. The second aspect is, because of the growth picking up, you would see a lot of non-oil imports, which is now getting into the imports data. So that is actually, if you look at the overall imports number for the previous month, which was around $50 billion, out of which around 12 billion was oil imports and around 38 was non-oil, which has been moving up. So this is actually putting the pressure on rupee. However, having said that, I think rupee has depreciated by around 10% at these levels, or possibly a little more depreciation from these levels. I think we would see a lot more value in rupee, because this prices in the election uncertainty, and at these levels possibly you would see a lot of FPIs also possibly getting into the domestic markets. You would see that people would be interested in the domestic bonds also, which are currently hovering at around 8%. So people might see value in that, and you would see that some flows start coming in. As it is, for the first half of the year, we saw a lot of outflows which had happened. Those have generally got abated, and you see FPIs are coming in very small steps, taking baby steps at these levels. So I think overall the picture seems to be a little not so bad as I see it.
Right. Firstly, what level do you see the rupee, if at all you do see it weakening further? And do you think it poses a big challenge for the RBI to come and step in and curb the volatility in the rupee? Because that's what they've been doing. So they have, sold dollars of about 33 million worth. And do you see them coming in again to curb the volatility, bring it at a certain level? And then what does this do for inflation?
Right. So if I were to just look at where the rupee was trading at around 2014, it was around 58, 59 levels. From there, if you were to just take into account the inflation differentials between US and our country, there should have been a general depreciation of 3 to 4% per annum. So in fact, for the first 3.5 years of the current regime, we saw that rupee was actually stuck in the 62 to 65 zone because of the strong inflows which were coming in both on the debt and on the equity side. So now the rupee has caught up with the inflation differentials and the real exchange differentials. So I think the move was expected, but possibly the move has been quite sharp, which generally happens in an election year. So I think broadly, if we were to take into account around 3 to 4% depreciation, we should be looking at a value of around 71 to 72 for the rupee, mostly on a fundamental basis. On technicals, I think the rupee is as in the dollar is very overbought at these levels. So I think possibly it could touch around 71 levels, and then we could see some kind of retracement from those levels. And however, the broader move could be up to 72 levels, after which a lot of election uncertainty and other things might be over, and possibly you could see fresh, and the fresh move would be dependent on the election outcome and some of those factors.
Right, Anand, this is where I need your opinion more than your expertise here. Is well, some quarters of the government are suggesting that the rupee is still a bit overvalued. It means that we could still see some more weakness come through. Do you think this is the new normal? This is the level that the government is comfortable with?
See, if you look at it, we were losing our export competitiveness, and so I think a little bit of depreciation was necessary. We have been quite strong. The rupee has been quite resilient in the first couple of years. So I think this move was needed. However, it has been slightly sharper. But still, I feel that the move should not be more than 71 to 72 in the current move. The other thing which you had asked about inflation, I think if you were to look at it, I think broadly it would mean a $10 movement in crude prices and the rupee and the dollar rupee would lead to around 30 basis points impact on CPI. CPI, the components of CPI are not impacted by imported inflation. It's mostly the WPI which is more impacted. CPI to a lot of extent is insulated by the domestic factors, food and other stuff, which is actually, the monsoon is actually boding well. So I don't see further pressure on food prices. The MSP prices have already been discounted, have been priced in. The RBI has actually delivered a front-loaded rate hike to take into account of some of these factors. So I think inflation should broadly be in the range of the comfort zone of RBI. However, the RBI has already in its annual report, if you would see the annual report or in the policy, they had indicated the inflation WPI, CPI to remain in the 4.5 to 4.8%, an average of 4.8% for the current year, and around 5.1 for the first quarter of next year. So as in, I think a little bit of the RBI has already taken cognizance of some of these factors, and the rate hike actually has been front-loaded and has taken care of some of these things.
So you're saying that there, the fact that you probably, if the currency weakens further from here because of the preemptive rate hikes that they've already taken, the chance of them having a slightly bigger nudge on the interest rate to curb the money supply and make sure that there is more rupee demand is not a possibility. They've already done that.
See, I think 25 basis points rate hike is still expected in the market. However, if the rupee were to
calendar, you mean?
This calendar year, and if the rupee were to breach the 72 mark, or if the dollar, the crude were to breach 80 mark, possibly there could be a fresh assessment of events, and possibly there could be further rate hikes. But as of now, I think a 25 basis points rate hike is what the market is actually baking in at these levels.
Interesting. What would make you change your hypothesis on the valuation on the rupee? I mean, or forget the valuation, forget the core valuation. What could make you change your hypothesis on where the rupee could slide towards? Would it be a factor of what crude does, or could it be something else?
I think in the very short term, I think the major factor would be crude. But if you look at some of the other things, the domestic growth has been very strong. In fact, I was reading an article. Hyundai is basically whatever export, the cars which were meant for export is being now pushed into the domestic markets because there's such a strong domestic consumption. So some of these things you would see as growth picks up, possibly non-oil imports, and there could be some exports which would be routed to the domestic markets. However, if growth were to pick up at these levels, I think with capacity utilization at around 78%, and if capacity utilization improves, I think some of these import substitution comes in, and you would see that these non-oil imports and other things would be taken care of. So I think that would be a long-term, slightly structural move. But immediately, I think the immediate target trigger would be crude oil.
Okay, just a quick follow-up. While RBI is usually intervened, I mean, there's a Bloomberg article, Anand, which speaks about how during this whole fortnight or a month of the pressure on emerging markets because of Turkey, the RBI intervention was minimalistic. Why would that be the case, you reckon?
I think basically, I think the RBI is comfortable. Basically, they would be stemming the daily volatility. However, they are more or less comfortable with the overall move in the direction of the rupee. I think broadly, now the RBI and the government is comfortable with the depreciation at these levels.
In any case, they would come in just to probably stem the volatility.
So they just stem the
not
volatility, daily
get at a
volatility.
particular rate,
So
yeah.
that is there.
Interesting. My final question, at least, and that is on the topic of rate hike, because I thought when the second rate hike came about and we were doing a conversation, almost everybody, and maybe the language from the Reserve Bank also seemed to suggest that after these two which were done back to back, there would be a prolonged pause. You seem to be differing from that view.
So some of the factors which have changed after that is the movement in rupee, and crude oil prices have continued to remain elevated, and this further puts pressure, and maybe we'll see the total onset of monsoon and some of these factors, and maybe a 25 basis points rate hike could be the maximum which we would see.
Just one last question, with regards to the correlation of the CAD and the currency and the pressures that build up thereof. So historically, countries, emerging market currency countries which have a higher CAD have seen a steeper pressure on the currency, which is probably what we're seeing for ourselves as well. So at a 5-year high for the CAD, do you see this pressure just ballooning?
Yeah. So if you look at the CAD trajectory, we were around 0.6% in 2016-17, and in 2017-18 we were around 1.7%. For the current year, economists and analysts are expecting around 2.5 to 2.6% of 2.7% CAD deficit. But it is still better than what we saw in 2013 when we were around 4.5% of CAD. Plus some of the factors that we spoke, this is mainly being led by domestic consumption, and you would see more and more capacities being created as we reach the critical mass. So I think as people get more confident and add to the capacities, I think to an extent CAD would it would relieve the pressure from CAD. Also at a certain price, I think demand destruction happens. If local petrol prices were to breach the 85-90 zone, I think some bit of demand destruction and some of the imported stuff getting very expensive, a little bit of demand destruction happens. As it is, we saw in gold, people are not buying gold anymore. From 2000, the gold imports have been very minuscule as a percentage of the total imports. So some of these things, structural changes are happening, and I think overall CAD should remain in this zone only, should not, I think there would be further steps taken so that CAD doesn't breach this zone.
Great, Anand, so good having you. Thanks so much for taking the time out.
Thank you so much.
And I appreciate you being in the studios.
Thank you so much.
Pleasure having you. Well,
thank you.
That's the view from RBL Bank on the currency. But Agam, if the currency is in a free fall, tea stocks are on a rise.
That's right. Well, we shift focus to some stock-specific action in this case, and of course, we've seen tea companies which have been trading with strong gains in today's trading session. What are the factors that are aiding these gains? Let's speak to a management of Jay Shree Tea. The managing director, Mr. DP Maheshwari, is on the phone line with us. Mr. Maheshwari, good afternoon, and thank you so much for joining us. Could you tell us a little more about the development of tea prices at this point in time in the markets that you have been trading? What sort of updates do you have out there, and how are you seeing traction in tea prices?
See, the only update I have is that tea production, June ending, is behind by 21 million kilograms. July we will lose 10 million kilograms. August, because of disasters in South India, we might lose further 10 million kilograms. So overall, ending August, we expect the production will be short by 41 million kilograms. And now, season is coming towards closure of the season. So this shortage plus the every year increase of around 35 million kilograms, that will create a big impact in the market. And I expect prices will go up. But the only thing is, you see, these 4 months, the spot availability of tea is quite high. So it might not show the full impact. But once this total high production months are over, sometime near Puja, prices will start picking up. Somebody has told me that even from September it might pick up. Well, it might pick up. Difficult for me to tell you the date. But definitely after Puja, prices will go up by 30 to 40 rupees a kilo.
Mr. Maheshwari, you're talking about a shortfall of supply at this point in time. That's the estimate. Can you tell us a little more about how long this shortfall can last? Because you're saying that the turnaround and increase in demand could start somewhere towards the end of October, November. If you could tell us how you expect this demand supply to change eventually over the next few months.
See, next 3 months, there is no chance of this shortfall to be made up. Your consumption is constant, average every month 90 million kilogram is consumed. So once the production comes down, and then you have got 4 months after that without production. So that is the time when people will try to stock the teas for their future consumption. And that is why the prices will go up.
Mr. Maheshwari, good afternoon. Just want to come in on what your plans are for your African estates in Rwanda and Uganda. I mean, you're looking at a production spike there as well. I believe you are taking some expenses out there to see some consolidation.
See, in Uganda, our production has gone up threefold. When we took over, it was around 1 million, and last year we made 3 million. And we expect ultimately it to go to 3.5 to 4 million kilogram. It's doing absolutely fine. In Rwanda, this year our production is high. Prices also is till date all right, but then in general, you see Mombasa market is down by almost $50 cents. So we also get affected, but I will say overall the situation is quite satisfactory.
Mr. Maheshwari, can you give us an idea about the cost that stands for a kilo or perhaps a ton for your company at this point in time, and how that can possibly change for this particular quarter given the anticipated shortfall in tea?
See, the cost, because of the labor negotiated wages which has been declared in Assam and West Bengal and in South India, and in any case wages are quite high. The cost across the board in West Bengal it will go up by almost 20 rupees. In Darjeeling, it will go up by 100 rupees a kilo. And in Assam, it will go up by around 22 rupees a kilo. And that is a done thing. Most of our cost is fixed cost. So we now can expect, we can only expect that prices will pick up to mitigate this increase. Crop, there is not much of a chance to increase the crop. That is how the situation is. But we are very hopeful that prices will definitely start picking. Maybe September itself, but definitely from October.
All right, so sir, I'm assuming that you're not expecting change in acreage. That means that there won't be a substantial increase in acreage, however prices will increase. That means, can you give us an idea about the entire financial year, how this can impact your revenues and earnings?
See, tea is a perennial crop. So overnight increasing area or increasing production is not possible. You see, it's an agriculture crop. If you plant tea today, after 7 years, you start getting the ideal crop. So that acreage increasing and all is not possible. Even otherwise, acreage increase is not taking place now. As far as my company is concerned, I can only tell you that in spite of these problems which I have narrated you, because of our insistence on producing very good quality and last 6 years development work, my crop also is ahead of last year. We will make almost 1 million kilogram. We will make more than last year, and my prices also are better because of quality. So I hope my company's financials should be much better than what they were last year. I can only tell you this much. I can't quantify it.
Right. Sir, just one last question before we let you go. Regarding your sugar business, I believe earlier on you had mentioned that you're looking at an investment of 85 crores for setting up an ethanol producing distillery in Bihar. What is the status update there?
Yeah, ma'am, we are going ahead with that, and the project is taking place. It is under implementation. We expect by January this should be working, and because of that, our profitability scenario also must change. And sugar unit after that, hopefully, will never look at losses. And this, whatever new investment we are bringing in should be over by December end. January, we want to start the new distillery, and that should give us enough profit.
Right. Mr. Maheshwari, thanks very much for joining us and sharing all those updates with us. So that's the management of Jay Shree Tea. The stock has been a buzzer in trade today. It's up about 10%. A few other stocks that I'd like to highlight that have actually seen an up move in the last hour of trade. A stock like ITC has seen a move, in the last 1 hour. UPL has seen an uptick. So there you have it, the stock seeing a spike. UPL also seeing a gradual upward move. Bajaj Finance, Axis Bank, Bharti Airtel, Hero Motor. These are all the large cap names which over the last 1 hour of trade have seen some amount of movement.
All right, so then with that, let's put the spotlight on JSW Steel. Now, the stock will be included on the Nifty 50 index, and analysts continue to remain bullish on the stock as well. And Neeraj, of course, is here with us with the analysis, courtesy the Bloomberg Terminal. So tell us, Neeraj, what more can you tell us about JSW Steel?
Yeah, actually, that's the question, isn't it, Agam? What more can anybody say about JSW Steel? So I'm not going to dwell too much on the fundamentals, really, but more the trade patterns that we've seen and what do the street as a consensus believe about JSW Steel. And this is the graphic dashboard. Now, a couple of points out here. One, the premium that it has versus peers, justifiably so. It's the best performing stock in the Asian region, forget India. So you have it at a small premium to the peers. Most people have a buy call. I think it's very difficult to have a sell call on JSW Steel. The three interesting names, and we'll talk about those as well. But largely, the calls are on the buy side. Today, the volumes, and if you can just bring up the 20-day average volumes versus today's volumes. This is on account of the Nifty inclusion or the news of the Nifty inclusion. And as a result, as you can see, this white line is today's volumes, and this blue line down below is the 20-day average. In today's session, both on the cash and the futures side, the volumes are substantially higher than the 20-day average. And if we can go back to the graphics dashboard and then get the ANR function as well. Firstly, the stock is up 8.5% today, and now the ANR will show you that because of this rally, now, based on the consensus estimates, the stock is slightly more expensive than the top target price. So the return potential is a negative 7.9%. But guys, safe to assume that even though the return potential may be 7 to 8% lower, I doubt that too many people will come out and have a convincing sell. In fact, the top calls that I can see, don't see too many sell calls out here. Maybe 1 or 2 sell calls because there are 3 sell calls out there. But I really doubt that those are very convincing ideas. Okay, Hormuz has gotten them for me. 2 underperforms and a reduce. So no outright sell as well from any of the names. And some of the top brokerages, any which ways, continue with their overweight rating and a buy call out there. So, well, interesting to see. The management has expressed confidence all through the calendar when they've gone out and tried to do the acquisitions as well. So doubt that the cycle is turning around, but let's wait and watch. For now, the going is good for JSW Steel.
Well, Neeraj, I was just, taking a look at the sell calls at this point in time, and a lot of them are in July. So I wonder if the inclusion, not that it changes anything fundamentally for JSW Steel, but I wonder the inclusion may change, the stance on, or at least increase the price targets at this point in time.
Yeah, should be interesting. Maybe there are technical triggers in place because, well, Nifty buying a lot of stocks rebalanced out there.
Right.
Well, should be interesting. Maybe just before we wrap up, if we can do an HDS, and I doubt, if we can do the HDS function on the terminal and just show the quantum of holding that foreign institutional investors have on this stock. Let's see if we can pull up that chart. Okay, yes, we do. I don't know. It'll be interesting to see what the current shareholding of global investors is versus the local investors, and if indeed then the technical trigger because of the Nifty inclusion would give that. Maybe not via this function, but during the course of the show, I think we'll talk about that as well. But so far, all's going good with JSW Steel.
It's interesting. The weightage also is slightly higher than what Lupin had. Lupin had about a 0.5% weightage on the index, and JSW Steel is coming in with a 0.8% weighted change, which also probably changes the dynamics for metals as a pack within the index. Because up till now, I think it was represented just by Tata Steel.
At least on the steel side, yes. Otherwise, the Hindalcos and the Vedantas. So together, it's interesting times for the best performing stock, steel stock in Asia. Because of this inclusion on the index as well. So guys, good going. I don't know how it's done on the future side today. I know the cash market volumes have gone up. I'm sure there's a long build-up that is seen there. But the quantum of change out there, don't quite have a handle right now.
Well, if we could actually pull up Tata Steel's ANR as well, because this was an interesting one, considering it's also a Nifty company. And the difference between Tata Steel and JSW Steel in terms of ANR is that while it does have just as many buys, the return potential is substantially high. It's up as much as 25%. But that said, we have to also remember that Tata Steel has had quite a knock, unlike JSW Steel in the recent past. And that's possibly the reason why return potential for something like Tata Steel is a lot higher at 25% as against a negative for JSW Steel.
They probably have China to thank for the kind of upside that they might actually see, because they're able to probably raise prices also because of the same domestic prices will probably see an uptick for them, and it works out well in terms of the interest that's coming into the stock.
If you can actually, just the last thing, that if you can pull up on On the graphics, the year-to-date performance of Tata Steel versus JSW Steel, it's a simple line chart which shows what the performance of both of these large steel majors has been. JSW Steel, of course, we know has by far been the best performer, not just in India and Asia, but just to show you what Tata Steel's YTD performance is this year, the point that Agam was trying to make, down about 18% versus JSW Steel's performance and outperformance on that end. So, well, good going, and with reason that Tata Steel has an upside potential where JSW Steel may be marginally lower. Anyways, back to you guys.
Yeah, well, I'm just trying to get the year-to-date returns for JSW Steel, and if we can have that on your screen as well, and that'll actually tell you how that stock is done on a year-to-date basis. So, of course, that is Tata Steel. I'm looking for JSW Steel at this point in time too. Let's see if we can pull up the year-to-date performance, and it has actually done quite well for itself. That's the intraday chart, and that is this year. So it's moved up 47%. Now that's possibly the reason why it has. Well, this is actually quite divergent for both Tata Steel and JSW Steel.
So it's rightfully the best performing steel stock within Asia. That's the comparative analysis of Tata Steel versus JSW Steel. That's there. Let's get in our technical analyst right now to talk a little bit more about JSW Steel, the index levels, because remember, on a daily basis, we've been making new highs on the Nifty as well as the Sensex. Today seems to be a bit more muted. Performance in the mid-cap and the small-cap end seems to be a little bit more enterprising than what we've seen on the index itself. Brijesh Singh of StockAxis joins in on the show right now. Ruchit Jain will also be with us. Good afternoon, gentlemen. Let's start off first with what we're seeing on JSW Steel. News-driven, but a spectacular intraday move of 10-odd%. We've not seen that in a long time for JSW Steel. Ruchit, I'll come to you with this one. How much more upside left? Because as per a Bloomberg analyst consensus, it's probably crossed their target price by a good 7-8%.
Very good afternoon, everyone. Certainly, this has been one of the moves that we rarely see in such mid to large cap stocks. Now, if we see then within the metal space, if we compare all the stocks from the metal space, then JSW Steel was already an outperformer. The stock has been trading near its 52-week highs, whereas we have seen a decent correction in some other names from the metal space. So it was already an outperformer, and if you see last few trading sessions, also good volumes were there. In fact, in today's trading session, post a gap up opening, although the gap up was news driven, but usually whenever we see any stock opening gap up post a positive news overnight, then what is the follow-up move that is more important. So today's follow-up move from the opening ticks itself was positive. So I think this momentum or the trend should continue going ahead. Yes, it's very difficult to project fresh levels now because the stock has already surpassed its target projection, whichever were there according to reciprocal retracement theories also. Now the best method to follow this trend is to keep trailing stop losses higher on the existing long positions. So 380 would be now a support level for the stock looking at the intraday chart. So any existing long positions should still be held on a JSW Steel with a revised stop loss below 380.
Okay, what about the markets? Brijesh, good afternoon to you, Neeraj here. How would you approach trade today in light of expiry tomorrow, either the Nifty or the Nifty Bank?
Good afternoon, everyone. No doubt, the Nifty from past couple of days, there has been a gap up opening and it's been moving up. And after making a all-time top of say 11,770 odd level, the Nifty right now is finding little bit difficult to cross the 11,075 or 11,080 mark, or say psychological 11,800 mark. So I'm looking a little bit of profit booking. Even the oscillators as well as the price charts are indicating there might be a small profit booking. Overall, the trend has been in a bull side, but for a couple of session, like say till expiry, I'm looking once Nifty might try to touch at least 11,625 or say 11,655 or level. So keeping that thing in my mind, purely from a STBT sort of point, I'm looking Nifty to sell somewhere around 11,730 with keeping a strict stop loss of 11,775 and look for the target of 11,655 or deeper would be 11,625 odd level.
What about you? How are you approaching the indices now and your call on the markets?
Well, recently we see when the markets had given a breakout from a consolidation phase in mid-July, Post then we have been positive, and on every dip we had given a buy call in Nifty as well as Bank Nifty. Even at current levels, we are quite bullish on the index front because there are no signs of reversal, no reversal patterns. Secondly, even if we see that today, although Nifty is down marginally by 20-25 points, but still the broad market participation is there on the positive side. So I don't think that the Nifty would see any significant correction in near term. Yes, there could be some volatility owing to the expiry which is there tomorrow, but I think this volatility or any kind of declines in such scenarios should be used as a buying opportunity. So we are advising our clients to create long positions. Intraday support is around 11,710. And for short term it's around 11,650. So the market is quite trading close to its intraday support, so one should create long positions over here. Definitely not for intraday, but from next 2 to 3 days perspective. 11,650, which is the second support, the stops should be kept below 11,650. And if we see reciprocal retracement theory, then the target projections on the higher side for Nifty in short term are coming around 11,840. So any such declines, even at current levels, we are advising to go long in Nifty from a short term perspective, keeping stop below 11,650 for target around 11,840.
All right, let's get in some stock ideas out of the way before we go across and get in some fundamental views. Let's start off with your strategies, Brijesh. You've got a call on Biocon and Jindal Steel and Power.
See, if I talk about Biocon on the 4-hourly chart, the stock has been moving up with higher lows formation. Even the oscillator has moving up same way. The previous swing high that was somewhere around 613 to 614 odd level that has been broken and it moved up. So keeping that thing in mind, I'm looking to buy this stock at the current juncture. I need it somewhere around 617 with keeping a strict stop loss of 608 and look for the target of 635. If any of or for a short-term point of view, if it holds on 600 odd level, then the value of the target value might be coming somewhere around 655 to 660 also. Another counter would be from a metal, as we all know that Jindal Steel or Vedanta or say Tata Steel, everything has been moving up. So Jindal Steel and Power, after forming a base at around 190, it has moved up significantly. So right now the stock is somewhere around 270 or say 218 odd level. So buying at the current juncture with keeping a stop loss of 211 and look for the target of 235. This is I'm talking for a 4 to 5 trading session.
You like DLF as well as Nilkamal. Interestingly, you're playing DLF through a call today.
Yes, the prime reason is now we have seen a breakout above its 200-day moving average in DLF. Secondly, if you see some of the options strategy, options front, then in this series, that is for tomorrow's trading session, 210, 215 call options where there was writing, we have been witnessing unwinding in that. Secondly, thirdly, if we see the September series DLF call option, then the fresh additions have been seen in 230 call options and not at the money 220, where highest open interest is there in August series. So we believe that this up move should continue in DLF since we have been witnessing good unwinding in call options, whichever writing was there. So for next series, for September series, one should go long on 225 call option, which is trading around 8 rupees right now. 3.70 should be the stop loss and 17 rupees would be the target in that call option. And then one stock in cash segment, which is Nilkamal, a higher top higher bottom structure has been seen in Nilkamal since last 1.5 months. On the weekly charts, prices have given a breakout above its trendline resistance. Even in today's trading session, after a consolidation phase, prices seem to have resumed its broader degree uptrend. So go long on Nilkamal for short term with stop below 1855, expecting target around 2105.
Okay. Gentlemen, just stay on with us. Let's bring in our fundamental guests as well. Nitasha Shankar of Securities is joining us on the show right now. Nitasha, what have you made of the current activity that we are seeing on the index? A few frontliners, Reliance Industries, the HDFC twins that have led the run up until now. Do you see that carrying on? Do you see more steam left in Reliance post 1300 for HDFC Bank and HDFC Limited? Is the upside capped or you see some more?
So as far as Reliance is concerned, we think that there is a lot of upside remaining. The company's petchem business has done well. There's been an expansion both on the margin side as well as on the return side, and we do think that that is only set to double in at least in the coming years. if not exceed that. And if you're looking at the Jio franchise, that too has been yielding surprisingly good returns. So we do think that there's a lot of upside left at Reliance. Of course, post the run-up that we've seen in recent past, profit booking was warranted, and that is what we're seeing today. But we believe that any such tip should be utilized as a good opportunity to accumulate further. On HDFC, we think that there are near-term pressures that the bank could see because of entry of other competitors, especially on the retail front, which would put a pressure on the NIMs as well as the NII growth going forward, at least in the near term. So given this kind of competitive scenario, we do think that the valuations have become a tad expensive, and we would prefer to buy it at around 1950 levels.
The rupee is at a lifetime low, a new low. What stocks are you watching out for, keeping an eye on based on the kind of the rupee movement that we've seen?
So I think it'd be very difficult to ignore the export-oriented stocks if you're looking at the rupee in particular. IT is something that does come into mind, and IT has been doing quite well. There's been a sizable improvement on the BFS segment, both on the demand scenario as well as the deal pipeline, and within that space all of the large caps look quite attractive, but in particular OFSS, Infosys as well as KPIT Systems is definitely our top picks. On the pharma side, we are a little selective because there's been a deterioration of margins, especially on the US side of the business, and any recovery, if any, would depend on the traction seen in the ramp up as well as the introduction of new formulations, the new approvals. So we are more positive on stocks like Aurobindo Pharma as well as Sun Pharma, wherein we see an attractive risk to reward ratio and are basically sellers as far as the rest of the sector is concerned.
There's pain on the aviation companies as well, Nitasha, for sure. I would reckon rupee would in part be to blame for this, but Interglobe at 970, 980, Jet notwithstanding, because that's got some other issues as well. But between Interglobe and SpiceJet, is there merit in trying to own any one of them?
Neeraj, we've been structurally a sell as far as the aviation sector is concerned. It is a business which tends to see operating expenses behave more like fixed expenses, and in the event of the kind of competition that we're seeing right now, that has hurt the top lines of pretty much all of the companies. So we would prefer to stay away from the entire sector as such.
Among stocks which are under serious pressure in today's session, I know we're talking about winners. Nitasha, Idea Cellular, sub 50 now, heavily indebted, yes, under a lot of stress. Does it provide even the remotest sense of value here, or, just avoid Idea even if you want to look at telco separately?
I think if I were to look at telecom, I would still play telecom through Reliance because of their exposure towards Jio than to play with Idea Cellular. Reliance has proven to be a complete disruptor in the entire space, and that has led to stretched balance sheets, and Idea has definitely borne the larger brunt of it. Other than that, Bharti Airtel would be one of my picks, but we would again, caution investors that it would take at least 2 to 3 years for pricing to stabilize to some extent, and if the company is able to monetize on the rest of their non-core businesses as they have been doing, they should be able to withstand this storm. So if one had to really look at the entire sector, Reliance for the Jio franchise and Bharti Airtel would be our picks.
Some more stocks. We've spoken about Future Consumer up 6.5% at 52 after a while now. Future Consumer Enterprises on big volumes as well. And interestingly, something that we never get tired of pointing out, if you look at the GD or the ANR of Future Consumer, you will see that the target price is well over 75. Most brokerages have a very bullish view. Target prices range anywhere between 75 rupees to even 83 rupees in the case of Morgan Stanley. So some interesting moves there and interesting predictions on Future Consumer Enterprises. Retail has been in the thick of things, Nitasha, but FCEL in particular, do you guys have coverage there?
Sorry, which one?
Future Consumer.
Yeah, we had initiated. In fact, that was a stock that we discussed on your channel about a year back as well. We're quite positive on future consumer. Even now, the company has seen an improvement in the margins because of the product mix. At the same time, they've been pushing their products through the different channels. Plus, they've seen the expansion on future retail channel as well, which is one of the main channels for them. The change in the management has definitely helped in providing a proper scenario and a proper outlook for the company. We continue to remain positive on the stock with a target price, I think, about 74-75 rupees.
Well, the top Nifty gainer on a year-to-date basis is Bajaj Finance, which is also the top gainer, or rather one of the top gainers in today's day of trade. Let's get a technical check going. It's currently at, well, okay, it's actually edging towards the mark of 3,000. It's moved from strength to strength. Ruchit, how would you approach Bajaj Finance? There's no letting up on this one. It just moves and continues to move higher. Would you trade turn cautious on this one, or would you continue to remain constructive?
I think there is no reason why should one sell this stock if anyone is holding, because there are no reversal patterns formed yet. If we see the recent past, whatever corrective actions have been seen in Bajaj Finance, they all are more of a time correction rather than price correction. So whenever the momentum readings get overbought, it sees a sideways movement for a few days and again resumes its uptrend. So that is what has been seen in recent past, and still since last few months, the even 20 days exponential moving average on the daily chart, which is a very short term average, that has not been breached yet. So one should continue to ride this trend. Even fresh buying could be done at current levels, keeping stop loss below 2800, which is currently the 20 days exponential moving average. So the view still remains positive. Fresh buying could also be done at current levels, and an existing long position should continue to be held on.
All right, just looking at some stocks approaching their 52-week highs, or probably currently trading at their 52-week highs. Intellect Design, which has suddenly seen a spike in trade at around 273. Its 52-week high is at 276, so a smidge away from its 52-week high. You've got the likes of Havells India, which is also closing in on its 52-week high of 726. It's currently trading at about 717. So intraday move, not much, but it is trading near its 52-week high. M&M Godrej Consumer Products, which has seen a 0.5% move in intraday trade, is at 1447. 52-week high is closer to 1460, which is also its lifetime high. And Axis Bank and Sundaram Fasteners is the other one, which has seen a move closer to their 52-week highs. Just come in on either a Godrej Consumer or a Havells, Nitasha, if you're tracking any of these.
I think we're more positive on Havells, which is the stock that we are tracking as of now. There's been a lot of activity on the affordable housing side, especially on the building front, and that Havells is definitely a brand which would benefit from it. Yeah, valuations are a tad bit stretched, so we have been recommending a buy on dips.
Okay, Nitasha, so if somebody were to be looking to make a fresh investment currently, would you advise that at these levels? And if so, what is the stock that one should watch out for? What is the stock that one can invest in?
Absolutely. Investment at any level, as long as the stock is fundamentally strong and the valuations are attractive, is always recommended. Like I spoke, that retail is an area that we've been focusing on. Already spoken about future consumer. The other stock that we are positive on is future retail. There's been a sizable traction on the way the same store sales growth has been going on. At the same time, there's been an expansion in the number of stores as well. So the company has also been utilizing the space within the stores more proactively to make sure that the same store sales growth actually keeps going up. The valuations are a little stretched, but we believe that these premiums are justified given the kind of growth outlook that the company has. So that's another stock that we've been recommending right now.
Okay, Nitasha, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. And appreciate your time. Well, there's a couple of stocks that one should watch out for. By the way, time now for the chart of the day. And despite expectations of rising consumption boosting demand for home appliances, TTK Prestige seems to have underperformed a smaller peer. Let's bring in Shraddha Babla, who's worked out the details for us for our chart of the day segment. Shraddha, interesting one.
Well, yes, so TTK Prestige has lagged a smaller peer, Hawkins Cookers, even as the rising consumption is expected to boost demand for home appliances. Now, shares of TTK Prestige have returned 8.2% in the last 1 year as compared to a 27.5% jump in Hawkins Cookers. Even over the last 1 month, TTK Prestige shares have risen about 11% compared to a 22% rise in the peer's stock price. Now, the appliance maker trades at 30 times its current earnings. That's according to Bloomberg data, and that is a huge 21% discount to the price to equity, that is PE ratio of 36.5 times that Hawkins Cooker trades at. Now, TTK Prestige is expected to benefit from improving rural consumption and government spending ahead of elections, market share gains from GST rollout and newer revenue streams. That's what the brokerage CLSA has said. The recent increase also in the rollout target for the government's Ujjwala Yojana scheme to provide cooking gas connections to 80 million poor households from the previous 50 million earlier is also expected to aid growth, according to the brokerage. So a strong balance sheet, CLSA said, should help TTK Prestige explore buyout opportunities. The question is, will all of that help TTK Prestige catch up with Hawkins Cookers? That's today's shot of the day.
Well, given the price target that has been put out of 7,725, probably the 20% upside could be seen as a catch-up if it does actually go in.
Yeah, let's see if CLSA has that buzz to it. Thanks, Shraddha. Thanks for bringing that perspective. That's TTK Prestige. Bring up that stock today, 7.5% higher with reason. We were talking about this in the morning, that if there's one brokerage that can get this going, it's TTK. It's not a stock that you usually ask for a trade. Brijesh Singh, very quickly, TTK Prestige. Have you looked at the charts?
See, the stock has moved up from 5,700 on a month of May and mid at low. And right now the stock is moving, has moved above the 200 simple moving average. That is somewhere around 6,600 odd level. So till the stock has been trading over this 6,600 odd level, you know, definitely one can take a buy call in it. Regarding with the resistance zones has been concerned, I am looking stock heading for level of 7,170 to 7,190 odd level. From there, I am looking the stock might get some, you know, profit booking might be seen in it.
Okay, just hold on to that thought. We'll slip in a quick break, but let's quickly also listen in to the comments from Sunil Subramaniam and S. Krishna Kumar of Sundaram Mutual Funds on the Indian markets and more. Here's what they're saying.
A significant part of the slowdown has happened in the balanced fund segment, which was earlier called balanced, now called equity hybrids. And the reason for the slowdown is the taxation on dividends which came through. So a lot of HNIs who used to invest and there were regular dividend payouts were getting now taxed. So I think those part of the flows are moving into a different kind of a balanced asset class, no, not necessarily into the balanced fund. So I think that's one of the reasons why there's been a slowdown. Otherwise, if you see the SIP group has been growing month on month, and at least August month, at least as far as our fund house is concerned, flows continue to remain strong. So we don't see any reason for panic or worry.
Mr. Kumar, on the markets and particularly the earnings season which just went by, and in the last 1 month we've done two pieces. Let me allude to that fact. One is that despite the market scaling new highs, analysts on the street have in fact cut down their target prices. Not only their target prices, yesterday we did something in which we showed how analysts have already started tempering their FY19 EPS expectation. So one is what is the sense that you are getting from the feedback that you have from the industry, and what is your expectation from FY19 on the whole?
Yeah. I think we do believe that the earnings season has been pretty good. In the last 3 quarters, we have seen a fair bit of recovery, which has been widespread. One of the sectors which has been causing this kind of volatility and earnings upgrades and downgrades for the whole Nifty and broad market is that the banking and financial space, if you look at the kind of stress, the corporate stress resolution that's happening now, the provisioning norms, etc., are kicking in, the NCLT proceedings are going on, getting a little delayed. So some of those numbers on provisions, etc., which will have an impact on the overall profitability of the space, is what is creating this downgrades, etc. So we do believe that X of banking, corporate banks, the Nifty earnings basically are quite sound and robust, and we are seeing definitely a high teens number over the next 3 years. So when you look at the investment horizon, I think investors should look at least a 2 to 3 year perspective to come into markets, and that too when you're going through the election in the next 1 year. So we do believe that with this kind of 18% compounded growth in earnings we expect for the broader markets, the outlook is pretty healthy, and so we are sticking to our positive investment bias at this point in time.
And what would be some of the top 3 sectors that you would be betting on, when you say that this compounded high teen growth will be delivered in the next 3 years?
Yeah, I think definitely one of the most important pillars of the economy has been consumption, the private consumption, and we strongly believe that despite some of the hiccups that were seen in the last 2 quarters, we're going to see a fairly strong bounce back in terms of consumption. Already FMCG companies have reported double-digit growth in the last couple of quarters. The rural India is really kind of firing in, and we are also seeing that the consumer discretionary space, which was a little weak on the electrical goods and the consumer durables, I think is going to come back again in the next 1 year. There is a lot of spending that's happening in the economy, and with the demographic dividend that we are seeing and the rising affluence and changing consumption behavior, we believe that this is a great place to be in. So, within consumers, basically, we would like to be positive on the automobile space at large. We are quite positive on lifestyle products, basically, be it retail, apparel, accessories, etc. We are also quite positive on some of the consumer categories on the food side. I think food and snacking is a huge segment where there is a shift into organized sector and growth that's happening there. So healthy food, convenience food, I think, and move up the value migration curve. So these are very significant. And to support all the consumption, the next big thing that's happening, and we are very positive, is the retail credit. Indian penetration in retail credit is about 15%. We see that India will go to 50% over the next decade, and that's a huge opportunity from a financial inclusion perspective. The next big sector within the financials that we are positive on is our industry, the wealth management and the insurance verticals, where we see a lot of growth that will happen as financialization of savings is what is expected in the next decade to take over.